Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, September the 28th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. Not a whole lot of economic data today and a pretty quiet market aside from what we're seeing here in crude oil. But across the pond, we had the BOJ governor, Cardosa, speaking, and Spanish flash PMI came in at 1.8%. Here in the United States, we got final GDP came in at 3.1%, was expected to be 3%, so slightly better than expected there. That's good. Unemployment claims came in line with expectations pretty much. Came in at 272,000, expected to be 269,000. And then we also got final GDP prices paid. Came in at 1%, was expected to be 1%. We also got preliminary wholesale inventories coming in a little bit higher than expected. Came in at 1%, was expected to be 0.4%, and they revised last month's number up by 2 ticks to 0.6%. So we're starting to see wholesale inventories increase. We aren't seeing necessarily the robustness in the economy to take those inventories off. I don't really, this is a hard number to really kind of discern what's going on there because you don't have the data to tell you whether or not they're building inventory in order for the maybe upcoming buying spree, if you will, or if it's just that they're continuing to manufacture and nobody's buying, so the inventories are building. So that's a hard number to crack. We also got natural gas storages coming at 58 billion cubic feet, was expected to be 77 billion cubic feet. And back on that wholesale inventory numbers, to me, it's kind of it's starting to look a little discerning, and that these inventories are rising. So when you start seeing that consistently, and you don't see any pullback on or any of those inventories moving, that's a little bit discerning. So that's the only takeaway from that, really. All right, on to crude oil. We got crude oil coming off quite a bit today, and is back below that Fibonacci level of 23.6. I talked about that acting as support, and it should act as support, especially the closer that this 9-day moving average kind of lines up with that. All of those factors are going to be an area where it's going to act as a bit of support. So it looks like that thing I was talking about yesterday with this volume node getting filled back in, that it's going to want to bounce in and around that between these two volume nodes could be very well going on. I'm a little bit more bearish crude oil at these levels just because I talked about the distillates and things of that nature starting to, the distilled products kind of going on the rise and those inventories rising. I think that that's showing that there's a lack of demand in a sense. So just my point there. We got gold futures slightly higher on the day with it bouncing off of the 61 fib level here. Came down, bounced off, and has showed quite a bit of support after yesterday. It just kind of slid almost unabated to the downside. We're starting to see a bit of support happening right now where the buyers are coming into that market. Similar situation with bonds. They are down on the day just slightly, but came down and tested this 200-day moving average. It's above that right now. It's acting as support, should act as support. But again, I think that maybe it is a little overdone to the downside. This is going to all be a support area. It wants to stay right in this area because that's what has been priced in as Fed action, if you will. We've got the VIX back below 10, means there's basically nothing going on, which there really isn't anything going on in the overall markets. It's actually slightly higher on the day from where it opened, but still in negative territory from yesterday's settlement. We've got the Dow Jones, and the reason why the VIX is slightly down is because we got the broader markets. The RUT, which I should probably pull up a chart of that later on, is just blasted off yesterday. It's the only market that's really had a lot of movement, but as you can see here with the Dow Jones Industrial Average up about 37 points, just really not a big move whatsoever. NASDAQ we have in negative territory just by about 14 points right here at the value area, or so I should say the point of control for where the most volume's traded. Inside day here, so anytime you have an inside day, there's just really not a lot going on. If we can see on the E-mini S&Ps up on the day, so mixed bag on the equities, but it is an inside day that you'll be able to see a little bit better on this chart here with the 30-minute breakdown segment. These are 30-minute candles, I should say, but you can see the value area high and the value area low well inside of yesterday's range, which ended up being a nice range at the end of the day, but and it did print all-time highs again yesterday. But what we're talking about here is that point of control lines up perfectly with yesterday's point of control and where the most, not necessarily most volume, but the most time has been spent for the last 10 or so days. So everything just lining up, just a very quiet market. So one other thing I want to talk about, I'm still in this Boeing trade. It has come back down inside of my strangle. Remember, I have on the 145, 155 strangle. It's been testing that a couple of times, but I'm still in this trade. I wanted to talk about the RUT, though. Let's just look at what the RUT did yesterday. And the Russell 2000 index, I mean, you can see it really blasted off yesterday, had a nice big day. But today, again, still pretty much an inside day for the most part. I haven't done anything though really today. I'm just kind of sitting on my hands really trying to find something to do. Haven't really done anything. Also, we're coming into the earnings season next week. We're going to have quite a few earnings start to kick off, and I want to save some margin for that. So I've got to find something really good in order to start using up my margin, because I'd like to save that for the earnings season. So haven't really done anything today. Got a couple working orders to get out of a couple things, XLU, XLV, but other than that, I'm just kind of sitting and waiting, and it's a pretty boring day, so I don't have a whole lot to talk about. Sorry, you guys. I'd like to put on a trade every day at least for you, but I haven't found anything good. So tomorrow, though, we're going to be talking about that Boeing trade that I was talking about here. I'm going to go into the details of how to set this up when this trade goes against you, like it did with me, and how to stay mechanical and stay with that trade, increase your credits that you accrue on it to increase your break evens on that. So I'll go into all the details tomorrow in the webinar, so go to protraderstrategies.com and sign up for that. All right, if you can't take that, take it easy.